Hey there, today we will talk about India's public debt and why it is not flying under any stress radar. So, first things first, how much debt does India have? To know that, let's first understand the term debt to GDP ratio. Debt to GDP ratio is basically a metric that compares a country's public debt to its gross domestic product. A country's public debt is the total amount of money that its government owes to various creditors. And GDP is the total market value of all the finished goods and services within a country's borders in a specific time period. So, this debt to GDP ratio compares what a country owes to what it makes. It's like comparing a person's loan to their income to predict their ability to repay the loan. Right, now that we know what the debt to GDP ratio is, let's come back to India's public debt. Currently, India's debt stands at 84% of GDP. Great. Now, is it high or low for our country? So, this is fairly high for an emerging economy. To give you some context, look at this table from Global Debt Monitor showing public debt as a percentage of GDP for different economies. Basically, India's debt of 84% of GDP is higher than emerging markets' average of 55%, but still much lower than that of advanced economies of over 100%. Alright, so should we be worried about it or not? Absolutely not. India's debt is actually considered sustainable, meaning it should be able to handle the payments it owes now and in the future without running into any financial trouble. There are broadly two reasons for this. Firstly, our debt structure is sound. How? India's public debt has a larger share of loans with long tenor and fixed rate coupons. What long tenor means is that most of our loans will be due for repayment later than sooner. The weighted average maturity, which is the weighted average tenor of all the loans put together, has increased from 9.7 years to 11 years in the last decade. This makes debt easy to manage and reduces the worry of having to repay it quickly. And fixed rate coupons mean that a loan has a steady, unchanging interest rate, which makes interest payments predictable, so easily manageable, unlike floating rates where rates can go up and down because of the movement of the external benchmark. Secondly, most of our debt is in rupees and not dollars, which means there's less risk from changes in currency exchange rates. It also means there's a steady demand for government debt. How? Most of the public debt is held by Indian banks and institutions which have to follow certain rules about the minimum and maximum public debt that they can hold. Because they have to necessarily hold some public debt, it means there's always a steady demand for government debt. Also, a lot of regular people like investing in safe government debt. They do it directly by putting money into small saving schemes or indirectly by saving their money in banks or buying insurance policies. This also ensures consistent demand for government debt. So, this brings us to the last part. How do we ensure that our public debt remains sustainable? Public debt is considered sustainable if it's not growing too fast. To achieve this, the government has two options: make more money from its debt than it pays in interest, or keep its regular spending in check. The first part is not a big problem for India because the country usually makes more money, as in achieving GDP growth, than it has to pay money in interest. But the second part, keeping spending in check, is tricky. India needs to cut down on how much extra money it's spending beyond interest payments. The International Monetary Fund suggests India should aim for a primary deficit, which is a gap between income and spending, excluding interest payments, of 2.3% of GDP, where it was much higher at 4.6% in financial year 21 to 22. To fix this, India could focus on growing its economy in the long term. If the economy gets bigger, it not only reduces the debt problem, but also brings in more money through taxes, which helps keep the debt under control. So yeah, that's all about India's debt. Check the description below for an explanation of jargon. Thanks for watching.